Welcome to the week that was, your shortcut to understanding the really impactful shifts in digital finance. This past week, Bitcoin, well, it took us on quite the journey. We saw it swing from a period of real caution to a pretty powerful surge. It's been fascinating to watch, and we're here to help you make sense of it all.
Yeah, indeed. What we've really observed is the market's, delicate balance being tested, but then finding a new, maybe stronger footing. Our mission in this deep dive is, well, it's to unpack the key forces that shaped Bitcoin's path this week.
Right.
We're talking price movements, market sentiment shifts, critical institutional plays, the evolving regulatory scene.
Which is huge right now.
Exactly. And some really groundbreaking tech developments, too. We'll connect these dots so you can understand why this past week might just be a bellwether for what's next in digital assets.
So let's dive into this dynamic week. Explore how Bitcoin navigated some, well, pretty strong currents and ended up with a significant upturn.
Okay, let's unpack this wild ride.
Yeah.
Earlier in the week, Bitcoin saw a sharp correction, pulled back significantly from its recent all-time high, which was over $124,000. We saw the price retreat, testing those crucial support levels around $115,000. That went on for a couple of days.
Yeah, and what's particularly interesting here is how analysts were talking about this initial drop. I mean, sure, it triggered over $1 billion in what they call leveraged liquidations.
$1 billion, yeah. That sounds dramatic.
It does. It essentially forced traders who'd borrowed heavily to bet on Bitcoin's rise to sell off. But interestingly, it was largely seen as a healthy consolidation.
Healthy consolidation,
Yeah.
okay, right. The key insight here is that while $1 billion sounds huge, the market's reaction shows a kind of maturing ecosystem. It's seen as a necessary cleansing of excess risk, creating a more stable foundation for where prices might go next. This resilience, it shows a shift from maybe past panics to a more fundamental grasp of market cycles. It actually makes Bitcoin more robust against these rapid shifts.
And the sentiment, well, it definitely reflected that initial downturn, didn't it? The crypto fear and greed index dipped squarely into fear territory midweek. What specific data points were really driving that caution? And were there any counter signals maybe that seasoned investors were looking at?
Yeah, you've hit on a key point there. This caution was largely driven by macroeconomic headwinds. Specifically, we saw stronger than anticipated U.S. Producer Price Index data for July come out.
Okay, the PPI data.
Exactly. And that suggested inflation pressures were still persistent, which immediately sort of dampened expectations for the Fed to cut interest rates in September. The probability of that cut just plummeted over a few days. And this whole higher for longer interest rate idea, well, it typically prompts investors to de-risk across the board, stocks, everything, including digital assets. It really highlighted Bitcoin's short-term connection to what other risk assets are doing.
But then, boom, everything changed on Friday, didn't it? Federal Reserve Chair Jerome Powell's speech at Jackson Hole, he delivered what a lot of people are calling a dovish pivot. For listeners who might not track every single Fed announcement, what exactly does dovish pivot mean in this context?
That's a great question. So a dovish pivot basically means the Fed signaled a more accommodating stance, less restrictive monetary policy than people were expecting just days before. Powell described the labor market as being in a, quote, curious kind of balance. And he noted that downside risks to employment are rising. His final statement, that the shifting balance of risks may warrant adjusting our policy stance, that sent a really powerful signal to the markets. It immediately propelled Bitcoin. It went from just hovering around $112,000 to a significant 24-hour high. And the odds of that September rate cut, they surged right back up. Trading volume exploded over $83 billion in 24 hours. This isn't just like a price blip. It's a fundamental re-rating of Bitcoin in the eyes of the market. It means for you, the listener, monitoring central bank policy is now just as critical as understanding crypto-specific news. Bitcoin's moves are increasingly tied to global liquidity flows.
And it wasn't just Bitcoin feeling that boost, right? Publicly traded crypto companies like MicroStrategy and Coinbase, they also saw pretty significant gains, up over 5%, nearly 7% respectively, really reflected that broad market optimism.
Exactly. And if we connect this to the bigger picture, despite that short-term volatility we just talked about, the underlying structural trend, the one of institutional and corporate adoption of Bitcoin that just kept moving forward, relentlessly, really. This often acts as a kind of counter-narrative to those price dips. We saw on-chain data this week revealing what people sometimes call a great wealth transfer.
Ah, yes, the great wealth transfer.
You had less experienced sort of short-term holders selling Bitcoin at a loss, maybe getting shaken out, while at the same time, the whales, These are the large, sophisticated investors. They were accumulating tens of thousands of Bitcoin during that exact same period. It's often seen as a classic sign of market strength. Conviction moving from, the weaker hands to the stronger ones.
That great wealth transfer, it sounds like the market is maybe getting smarter, right? And speaking of smart money, we saw some incredible examples of that institutional conviction throughout the week, reinforcing this whole trend. What really stood out to you?
Oh, quite a bit, actually. We saw a really clear trend of corporate treasuries doubling down, like strategy, formerly MicroStrategy, continuing its aggressive Bitcoin buying. They added another 430 BTC for over $51 million. Their total holding is just massive now.
It really is.
And Japan's Metaplanet Inc., they also added significantly. Plus, Netherlands-based Amdax announced plans to set up a Bitcoin treasury company listed on Euronext Amsterdam, aiming to get 1% of Bitcoin's total supply.
1%, that's
Yeah.
huge. 210,000 Bitcoin.
It's ambitious. These moves really highlight this growing trend of Bitcoin treasuries as a service, where companies see Bitcoin not just as an investment, but as a core strategic asset.
But maybe even more compelling were the endorsements and the deeper integrations from the big traditional finance players, wasn't it?
Absolutely. Take BlackRock. Their crypto holdings surpassed $100 billion this week. The vast majority of that, $89 billion plus, is in Bitcoin. That's powerful institutional validation right there.
Undeniable.
Then you have Swiss private bank Swiss Capital reopening its BTC Alpha Fund with serious commitments already locked in from sophisticated investors. And 2Prime partnered with Figment. They're offering integrated Bitcoin yield and staking solutions specifically for institutions. So this isn't just dipping a toe in anymore. It's deep integration of Bitcoin into traditional financial plumbing.
And the week ended with maybe the biggest stamp of approval yet. On Friday, Allianz, one of the world's largest insurance and asset management firms, over $2.5 trillion under management.
Yeah, huge.
They formally declared Bitcoin a credible store of value. That feels like a massive statement.
It truly is. And alongside that, you had Hong Kong-based Mingxing Group Holdings announce a landmark purchase, 4,250 Bitcoin, for nearly $500 million for its corporate treasury.
Wow.
Even Trump Media and Technology Group filed for regulatory approval to launch a new crypto blue chip ETF. All these developments, they just underscore Bitcoin's deepening integration into traditional finance.
Yeah.
You have asset managers like Bitwise now projecting Bitcoin to deliver 28% annualized returns over the next decade.
28% annualized.
Yeah, potentially reaching $1.3 million by 2035. And Coinbase CEO Brian Armstrong independently restated his belief that Bitcoin could hit $1 million per coin by 2030. Plus, those dovish signals from the Fed we talked about, they only reinforce the argument for holding a non-sovereign, scarce asset like Bitcoin as a strategic reserve, especially in today's uncertain economic climate.
This is where it gets really interesting for me. Beyond the price action, beyond the institutional moves, the global regulatory landscape, it really feels like it's undergoing a tectonic shift. Are we moving from just uncertainty and confusion towards clear, actionable frameworks, especially in the US and maybe Europe?
That's exactly right. And this is such a critical factor for de-risking the asset class, which enables that broader institutional adoption we just discussed. Yeah. Just this week alone, we saw the U.S. Commodity Futures Trading Commission, the CFTC, accelerate its Crypto Sprint initiative. That signals a more collaborative approach to making rules, rather than just, outright bans or ignoring
Without working with the industry.
Precisely. Then in India, the Central Board of Direct Taxes started a major consultation with crypto stakeholders. That hints at a possible rethink of the country's really stringent digital asset policies. And Gemini secured a MiCA license in Malta. MiCA is that crucial EU-wide regulatory framework. So that allows Gemini to expand across over 30 European countries under one clear set of rules.
And the regulatory shifts on Friday were particularly impactful here in the U.S., weren't they? Seemed like big news.
Oh, definitely. The U.S. House of Representatives attached a provision to the 2026 National Defense Authorization Act, the defense spending bill, that would effectively ban the Federal Reserve from issuing a central bank digital currency, a CBDC.
Ban the Fed from issuing a CBDC. That's huge for Bitcoin, isn't it?
It's profoundly significant. It removes a potential systemic competitor that many people feared could centralize digital money under government control. Plus, Senator Cynthia Lunis stated her aim for a year-end deadline to pass a comprehensive crypto market structure bill. That signals real high-level political will for regulatory clarity. Taken together, these actions suggest an emerging U.S. policy framework that seems to increasingly favor private, decentralized networks like Bitcoin over, say, a government-run digital dollar.
So it's not just about regulation laying the groundwork, it's also about the tech itself. The innovation seems to be transforming Bitcoin beyond simply being digital gold. This week saw some major breakthroughs that really expand what Bitcoin can do.
Yeah, this truly is a technological renaissance happening on Bitcoin. The RGB protocol officially launched on the mainnet. This is a game changer. Why? Because it enables sophisticated smart contracts and tokenized assets, think stablecoins, NFTs, that kind of stuff, directly on Bitcoin's own network and its speed layer, the Lightning Network.
So more programmability, right, like other blockchains have.
Exactly. It addresses Bitcoin's historical limitation in programmability, opening up just a whole new world of potential applications built directly on Bitcoin's security. And, complementing this, Tether integrated Lightspark's Bitcoin Lightning Network tech into its wallet development kit. This positions Bitcoin as a highly competitive way to send value globally, directly challenging, traditional payment networks like SWIFT or Visa.
So the Lightning Network, Bitcoin's second layer for speed and low fees, it's really maturing now. Beyond just the theoretical capacity numbers, it's becoming a viable real-world solution.
Absolutely. Forget just looking at the public capacity stats, which can be misleading. Real-world usage is surging. It's now estimated to be reaching something like 650 million users through integrations into mainstream apps people already use. Platforms like LN Markets are processing $1.5 billion in monthly trading volume just for derivatives on Lightning.
$1.5 billion a month.
Yeah. And critically, SoFi is set to become the first U.S. bank to integrate the Lightning Network for international remittances. That's a direct challenge to the multi-hundred-billion-dollar global remittance market. Huge potential there.
Wow, a U.S. bank using Lightning.
Oh. And we also saw Taproot adoption. That's an earlier Bitcoin upgrade that helps efficiency and privacy surge from just 1% a year ago to 39% now. That enhances the network for these second-layer solutions like Lightning. And underpinning all this, on the base layer, Bitcoin mining difficulty hit a new all-time high this week. That reflects massive capital investment pouring in to secure the network, making it incredibly robust. And there's even this fascinating new synergy emerging between miners and AI, like TeraWulf's partnership with Google for high-performance computing using miner infrastructure.
So bringing it all together then, what does this all mean for you, the listener, trying to navigate this complex space? This past week delivered, well, a really powerful narrative, didn't it? You had the market reacting to big macro shifts, but fundamentally underpinned by this unwavering institutional interest and really accelerating technological progress.
Precisely. The market action we saw, moving from that fear midweek to a macro-catalyzed rally, it's actually a constructive process. This bull market seems to be supported by a far more diverse and resilient set of drivers than we've seen in any previous cycle. So for you, the most important data points to keep watching are probably the continued progress in global regulatory frameworks. Clarity is key. The expansion of that capital pipeline from traditional finance are institutions continuing to deploy serious money. And critically, the real-world adoption of Layer 2 technologies like the Lightning Network. Are people actually using it for more things? These foundational elements will likely dictate Bitcoin's long-term path far more than, the daily price swings driven by sentiment.
It really makes you wonder, doesn't it? As Bitcoin keeps proving its resilience, its utility, evolving so rapidly on all these fronts, a macro asset, a programmable network, how will its dual identity end up reshaping the global economy? Is this the dawn of that golden age of innovation the CFTC mentioned? Or maybe the beginning of a new era where digital assets like Bitcoin play a really pivotal role in geopolitical and economic competition? That's definitely a thought to chew on. Thanks for joining us on The Week That Was. We'll be back with another deep dive soon.